In the wake of century-high U.S. tariffs, the International Monetary Fund has downgraded its growth outlook for most countries. That is the conversation that we're getting into with Sanel Lesbia. Right now, we want to look at the IMF that now projects global growth at just 2.8% for 2025, a sharp drop from the 3.3% forecast that was issued in January. Now, the fund's chief economists say that the world has entered a new era of trade marked by escalating tensions and a major global reset. So what does this downward revision mean for economies around the world, including our small nation here in the Kingdom of Eswatini? Sanel Lesbia is our economist. He's in studio and he's going to help us break it all down and, just to bring us the latest from the IMF World Bank spring meetings in Washington, D.C. Sanel, good afternoon. Welcome to the show. A new era of global trade. That is strong language. What does it mean, and what do they mean by that?
It's not a new era. One would say it's just a revert back. It's a revert to the old days before we came up with the WTO. Pushing for free trade, abolishing of all tariffs, and because right now you needed to have a strong argument why you want to have tariffs on certain commodities, right? But right now what we're seeing with the US breaking rank from that, so essentially it's a free-for-all. So right now anyone and everybody can just issue tariffs just like that. So we are being ushered into a new age, which in itself is just a restoring of maybe say trade 1.0.
I want us to get into the numbers. I have the chart here. I'll just quickly open it. A 0.5 drop in global growth. That is no small dip if we really put it in the grand scheme of things and we really count, what that is. But the United States here is taking a particularly sharp hit. This is from 2.7 down to 1.8. The difference is 0.9. Why is the world's largest economy slowing so aggressively?
So I think what we're seeing there with that 90 basis point cut is an issue to do with the impact of tariffs, right? So tariffs ideally do not hurt the exporter, but they hurt the importer. So what this means is if we continue seeing this high level of tariffs within the US, with the US being an importer, that's where the tariff gets paid. So essentially we're going to see that a bit of inflation coming through from the US, and once the commodities become a bit expensive, that's going to slow consumer demand within the US, and ultimately we should see that economy slowing down. And also the issue to do with supply chains, even if companies in the US do want to get into production within the US economy, but now it becomes a bit of a problem in terms of, let's say you want to set up a car assembly plant. You can't do it in 2 months. It needs time. It needs proper planning. So for this year, it'd be a bit difficult for those supply chains to move and, for all that production to move back into the US. So yeah, if President Trump continues with this policy, we've got to understand that what we call the transition is not at all going to be easy.
But not so much easy for the US. It seems like they're, receiving the biggest brunt of it all, and I wonder what his foresight is telling him. His team has a lot of advisors, but sometimes it seems as if he doesn't even need advisors. He makes announcements that people who are responsible for those announcements get shocked with his own pronouncements. So I'm really, really fascinated to see how all of this unfolds. But I think the kind of conclusion that we can reach here is that developed economies are suffering, but so are emerging ones, and that is where we come in as the Kingdom of Eswatini. And I wonder what kind of downstream effects should we expect from this global cool down?
So Eswatini is what we call a net importer, right? And we basically drive a trade-driven economy and a services-driven economy.
Yeah.
So when we see the global economy slowing down, that means, our exports are not going to find much market. So we're going to see that slowdown is going to affect our export potential. And when we also want to import commodities, given how the tariffs are going to play and how supply chains are going to be affected across the globe, you might find that we do import a bit of that inflation. For example, if within China to produce a certain commodity, certain imports have to come from the US. So imagine now that input comes into the US and it attracts that 140% tariff into China, and then now we are producing a commodity that needs to go into Eswatini from China. It is also going to carry that 145% tariff in itself. So we end up importing such commodities, such inflation. And also there is the issue of the retaliation in itself. How far will it go, right? I mean, we've heard China saying that they are going to retaliate with countries that are going to cooperate with the US to hurt China. So what essentially that means is China is not only going to focus their wrath on the US. If certain countries are seen as co-conspirators with the US, then we are going to see that type of impact happening. So, supply chains might most likely be affected across the globe, not just within what the US and China do. So we should likely see that as well. And essentially, what we'd likely see is a slowing down of our own economy here in Eswatini. And as we await to see what the number is going to be tomorrow for Eswatini. But as you've rightly mentioned, emerging economies and low middle income countries have also been revised downwards.
I like this graphic here on our screen. And, unfortunately, they just took it down. But it's pretty much showing us the numbers within the US as well as the United Kingdom. And this is what we call advanced economies, as it were. The United States moves from 2.7 to 1.8. We've already highlighted that. That means a 0.9 difference.
Yeah.
The UK moves from 1.6 to 1.1. That's a 0.5 difference. Pretty much the same difference that we are inheriting ourselves. Yeah. And you mentioned something around inheriting inflation. And as you expound on that, I wonder if this speaks to a recession risk that is back on the global table, or a realignment, or stagnation, not collapse. What is it?
But I think what we would rather say is it's a bit of stagnation. That's what I would call it.
Stagnation.
Yeah, because when you look at the news coming out of Washington, from the IMF World Bank conference, that spring conference, what it's telling us is, yes, we are seeing those downward revisions. But when you look at the fundamentals within the United States, they remain positive, very strong. So what you're seeing is the US moving from a very strong economic position into somewhat of a compromised economic position. And not yet much, not yet much in terms of warranting recession fears, at least according to the IMF. But yeah, we are watching out for how this is going to play out and how this entire tariff story is actually going to play into either plunging the global economy into a recession or actually getting us out of one. And we do hope that President Trump plays nice with President Xi, as has been saying this morning. So we're also seeing that change in tone from Washington, more especially from President Trump himself, saying now we're going to play nice with Xi, and we hope he plays nice so we reach a deal. So hopefully this is only going to be transient.
The best way to respond to a bully is to retaliate, is to bully the bully. And you see the bully becoming nice, and that is exactly what we are seeing now. I wonder, for an economy like Eswatini, I think we have agreed we're an emerging economy, 0.5. What's the priority right now? Do we brace for headwinds, or we hold steady?
Right now, I would say until we have more information we need to hold steady. But in the background, what we need to be doing is to be simulating all these different scenarios and preparing for the worst case scenario and pray that it doesn't happen, but you need to be prepared for it, right?
Okay.
In order for us to do that, what we need to do is to model the numbers and play around with the data and see how the tariffs are likely going to divert trade and how much trade we are going to get coming to us and how much of our trade into the US and across the globe is going to be diverted, you know, all of those things. And that way would be able to make sense of what is to come. But until these talks about tariffs and Russia, Ukraine and Israel have all subsided and we've all gotten that much more information around that, all we can do right now is to plan for it, because even if we wanted to do something about the tariffs, what we are seeing coming out of the numbers, Mr. Ngumran, out of Washington, is regardless of whatever happens, the 10% global tariff remains for everyone else. So Eswatini really has no negotiating room here until and unless the White House comes out and says, no, we're doing away with this 10% as well. So can countries come forward to make a deal? So Eswatini can only watch and see right now and only plan our best after this scenario has occurred. And also, we need to be looking at diversification. That one, we cannot wait to see what's coming out from the White House. We just need to start diversifying our markets right now while we are not compromising on our quota into the US.
Absolutely. I think for the benefit of the viewer, you know, as you're making that point, I think it's important that they really understand what you really mean when you say, you know, regardless of what happens, that 10% affects us no matter what the case is, because that affects directly the AGOA, right?
Yeah.
I think we had to highlight that because someone else would be like, okay, what does it mean?
What 10%?
Yeah, what 10% really? Let's talk about, okay, I also like the fact that you do say, we hold steady, but we also brace for headwinds. It's not an either or type thing, but it's both really. But I think a question that we can put in the middle is, what kind of opportunities can we seize as this transition happens?
You know, like we've always said in this program, there's always opportunity in chaos, right? Right now, you have quite a number of countries that are battling, trying to make a deal. Until and unless a deal has been made, we become the most preferred partner in terms of trade, right? So we need to start right now going out and, you know, attracting investors to say you can route your commodities through us and they'll only get the 10% tariff. So that's one of the things that we are likely going to see happening with all this entire, you know, trade war. If it plays out this way, you might see China diverting their commodities to go through what you'd call intermediary countries, right? So that it gets into the US, and then eventually, if we can make it such that the rules of origin allow for that commodity to be considered as a commodity of Eswatini and it goes into the US, only attracting that universal 10% tariff. So we need to think around such things. How can we get to divert value chains to funnel their commodities through us, more especially?
I've been advised that we should end our segment, but I will still 30 seconds. Please be very frank here. If you were to advise the Governor, Dr. Philip Nisi, or Minister Neil Reichenberg right now, what is the most urgent sort of decision that they should take in the midst of this development?
So I would say basically support businesses to diversify.
Interesting. Thank you. Sarah Lesbi, our economist there, chiming into this development happening around global growth that has taken a hit as the IMF slashes its forecast. Let's go for that break. Toba is here to decode the indices with Lungalele Makakula after the break.
Hi, I'm Alex. Let's talk about banks, specifically central banks. Believe it or not, they're really important to our everyday lives. Central banks manage the flow of money in a country's economy, so things don't go haywire. They're typically part of the government, although they should operate independently. The specific roles of central banks vary from country to country, but they usually have a few key responsibilities. Mainly, they're in charge of monetary policy to keep prices stable. One way they do this is through what's called the interest rate, which is the cost of borrowing money. Central banks lower interest rates, making credit cheap to boost the economy. Because when credit to buy things, such as homes, food, and cars gets cheaper, people tend to buy more. And who doesn't love that? But when prices get too high, central banks can raise rates, making money more expensive to borrow. This can slow growth, but it also brings down prices. Central banks also buy and sell foreign currency. They can do this to weaken or support the value of their own currency. Stability isn't just about keeping prices steady. That's why central banks also play a key role in preserving financial stability. For example, if a commercial bank is in trouble, a central bank can give them a loan, but only as a last resort. Central banks have been using all of these tools to help keep things stable for hundreds of years. Okay, so why am I telling you this? Well, whether you're buying bread, or a pomegranate, or even starting a business, that stability is important for all of us. And here at the IMF, a big part of our job is providing policy advice that can help central banks all over the world meet their price and financial stability goals.
Welcome back. This is the final segment. You're still tuned into Nedbank Business Watch. Thank you for staying with us. It's 13 minutes before 3 o'clock. We get into today's financial markets with Toba Kamese from Nedbank Eswatini. Toba, very good afternoon. Welcome. I think the financial markets have gotten used to that anything is possible, anything can happen in 24 hours. President Donald Trump has changed his tune. Has actually backed away from threatening power, Joe Power. What's going on there? Give us an update.
Right, thank you, Lulu, and good afternoon to you as well and our viewers. So yeah, you are right. 24 hours is a very long time in global markets. So over the last couple of days, we've seen President Donald Trump tweeting or just making statements about how the Fed is actually slow in cutting interest rates. He feels that rates should be lower than what they are, basically interfering in the monetary policy stance that the Fed is currently taking. So that is sort of, made the markets to be a bit worried in terms of independence of the Fed, because the independence is supposed to be the Fed is supposed to be an independent body that does not have political influence, but looks at prudent monetary policy measures to drive economic growth and all of that in the economy. So that interference from the White House was making investors a bit jittery. He has come out to say that he's not firing him. He is not sort of backing away, as we've said. And that has sort of given the market a little bit of ease and breathing ground in terms of uncertainty and just because the market is not enjoying the high rates that are currently there, but they don't want the rate cuts to come from the president, but they should rather come from the Fed as the body, the rightful body that is supposed to do that. So he has sort of backtracked on the statements that he's made, and he said that he'll welcome interest rate cuts, but if not, then we move along.
Yeah, he seems like a person that does not think things through. He just speaks his mind and then later changes his tune. So the U.S. Treasury Secretary believes that there will be a de-escalation in U.S.-China trade tensions. What are your thoughts on that?
Yeah, so he has also come out to just give a softer softer comments on the trade war between the U.S. and China. He has come out to say that the U.S. is open to a deal with China. They are ready to conclude a deal. He promises to be nice and he promises to be fair. He said that should China not come to the table on these negotiations, then they're going to set the terms of the deal. But all in all, looks like the current tariffs that we are seeing, 145 on Chinese imports into the U.S., is likely going to go down, but he did mention that that number will definitely not be zero. Okay. So the tensions seems to be easing. In that front, we're hoping that then they will be able to come together and reach an agreement in terms of the tariffs.
Yeah, with all these tensions, tariffs, pause, and this drama with Donald Trump and Jerome Powell, what is the worldwide economic outlook in the coming months?
There's still a bit of uncertainty. This has given a bit of relief to the market in the comments, the softer comments that we are seeing from the U.S. president. But that is not something to hold on to and say this is what is happening. There's still a lot of global uncertainty. There's still a lot of things that are happening. We still have the geopolitical tensions in the Middle East. We still have Russia, Ukraine. We still have the tariffs. They are on pause, and looks like there are talks to scale them back. But we still have all of that hanging over the global economy. So in that regard, central banks are still just cautious in terms of their monetary policy adjustments. Should they be cutting rates? Should they be, so they are just treading carefully right now. But the current environment, what we're seeing today from yesterday's comments from the president, it sort of gave the market a bit of ease, if I can put it like that.
That's interesting, all right.
Yeah.
Let's take a look at today's currencies, Toba. How's the Lilangeni trading today?
All right, so the rand is trading quite well when we look at where we're coming from the beginning of the month. We saw highs of 19.9 at the height of the tariffs, but today it's trading at 18.57 against the USD. Slightly down, the euro at 21.1777 and the pound at 24.7150. I think against the dollar, so today we received inflation numbers from South Africa. So the inflation came out lower than expected at 2.7%. Market was anticipating 2.9. So inflation dropped from 3.2 in February in South Africa to 2.7%. But what I would say is the driving force behind the rates that we are seeing is the comments coming from the U.S. So it's what is happening in the U.S., what we've just spoken about. From a pound perspective, today the British Statistics Office released the PMI numbers, so the Producer Manufacturing Index numbers for April, which showed that private sector business activity in the UK contracted. It came out at 48 against 51 last month. So anything below 50 is a contraction in the business activity in the private sector. So that sort of then weighed down on the pound and the British economy as a whole.
Okay, so moving along, we take a look at commodities today. How's gold reacting to markets today?
All right, so gold has lost a bit of its rally today. Yesterday we saw gold reaching about $3,500 per ounce, but today we're trading at 3,330, which is 1.53%, a 1.53% drop. That is due to the sentiments that are coming out of the market after the softer comments from the president on both Powell as well as the China. So investors are at ease to then just explore riskier options and, leave gold for a second. But we're not sure if this drop is going to continue or if it'll divert back, but we'll wait to see. Brent crude, on the other hand, is up at $70.54 per barrel, which is 1.48%. Two drivers there. The first one is fresh sanctions on Iran by the U.S., which then disrupts supply. And then the second factor is increased or rather decreased stockpiles in the U.S. So an industry report has indicated that crude stockpiles in the U.S. have declined more than what the market was expecting, which means that consumption of crude products is actually higher. And then that talks to production and the economic activity. So that has sort of boosted the price of oil to the levels that we're seeing. We haven't seen 70 in a while. Probably the first time we're seeing 70 this month. They've been trading at 60 something there.
Okay.
Yeah.
So with what's happening in the U.S., what's happening with equities today?
Right, so equities are doing quite well. I think the response to the positive sentiments from the president to investors as well as the market is evident in that. They are all green, the S&P 500, the FTSE as well, because it's global sentiments more than anything. So in the U.S., we're seeing Tesla share price going up today after Elon Musk said that he is going to, at the end of the month, move away from his involvement in the White House and focus more on his companies. So that has boosted the price of the Tesla share price. But other than that, almost all of the share price or the equity indexes are on the green today.
All right, thank you, Toba. Thank you for that analysis today. That was Toba Kamete from Nedbank Eswatini, just giving us an analysis of today's markets. As we did say that anything can happen in 24 hours with financial markets. We go for an ad break quickly and we wrap up the program with Sfiso. Stay tuned.